Welcome back, folks. Dow Industrials down 167, Nasdaq's up 114, S&Ps are up 27. Let's go over to our man, Mr. Jason Pfaff, as we do every Tuesday and Thursday, talking markets. Jason, what's going on?
How are you, Tom?
I'm doing great, man.
Today, huh? Hey, a lot of price action today, man.
A lot of price action. And Jason's got a real treat for us today, man. This is really intriguing. I haven't gone over this chart yet, but I'm looking at the headlines, and it says the largest 50-day S&P index gains ever, in parentheses, greater than 20%. This was the greatest 50-day rally ever. Past big rallies have led to continued strength. So talk to me about this.
Right.
Look at this.
Yeah, so, full disclosure here, I'm bearish at where we are now, right? You mentioned it before the break.
Yep.
You just look at the list of the top 10 movers, and, I mean, those names are just, it's just, some companies with some challenges. Let's leave it there.
Sure.
Yeah, I don't like the levels we're at now to go longer, but as you know, Tom, my approach is to work quantitatively. We work with a lot of data. I do pull in fundamental, macro level insight as well, and try and triangulate that with the data. Basically, I want to find data that validates, some of the fundamental things we're looking at, and also look at technicals and charts as well. What's been so hard lately has been just the unprecedented nature of what we've seen, right? Like, we've never seen a market like this. We've never seen movement. We all get that. So the models really haven't worked as well as they should have, because, there's no real prior history. Again, we get that. So I'm bearish, but I'm always looking for, like any good trader, you almost want to try and talk yourself out of a trade before you make the trade. Make sure, you're really feeling good about where you are. This is the best data I could find that would be a bullish case for an extension from here. So basically breaking this down, this is saying over the last 50 days, we've had the largest positive move in the S&P 500 in history, bar none, the biggest 50-day change ever. Historically, if you look 1 month out, 3 months out, 6 months out, or 12 months out, that's almost always led to continued gains over those time frames. So only twice, in 1975 and 1982, only twice did that mean we moved lower 1 month out.
Yeah.
Only once did we move lower 3 months out, and we've never moved lower 6 or 12 months out with a top 10 move over a 50-day period like we've seen. 50 days is essentially, 2 months, a couple of days.
Yeah, it's actually, the average trading days, folks, are 21 days, 21 and a half to be exact. But so that's pretty cool, man. I mean, hey, listen, man, this would be great. I would love to see, I don't care if we do a correction on the way down, we come flying back up. Who cares? I mean, this is interesting.
It's essentially a momentum case. Now, a lot of quantitative models are built on momentum. I do have momentum models, and all of those are pointing up and to the right. But again, then when you step back to some of the other models we have that shows us historically, forward EPS or unemployment and, other things that correlate, they all point to, a down market. So I just wanted to offer this as a perspective. If you're a momentum trader and you are in and hitting the gas and you want some justification for an extension of that, you absolutely have that historically based on the size of the move we've seen. It has absolutely been a V-shaped recovery in markets. The NASDAQ has moved faster, higher than ever before. But again, on the downside, we almost 2 million more people out of work. I see nothing on the horizon that fixes the employment situation. Oil's still a mess, although it's up. So you've got a case to go either way. Personally, I'm pretty flat to most equities. Looking at Forex and energy and some other places. You were talking about bonds earlier. I love yields to move higher. Sounds like you feel the same way. You look at the 10-year. I've been in the 30-year yield lately. That's really been a nice play. So there's some other markets that make more sense to me, but I just wanted to offer this as perspective.
No, I love it, man. Listen, it's good to know. It doesn't mean that this time would be different, but it's cool to know, man. So let's talk oil, man. This oil baby is just laying at this gap at $37, man. I mean, I'm sure that the folks that were bullish yesterday, they must have been in shock that the bottom line is that we had. The number was much smaller than the market was expecting, but yet oil still couldn't move.
That's right. Yeah, and I think it's trapped. I said this last Tuesday. We talked about oil on Tuesday. I think you're trapped in a range. You've got speculation that we could move up from here, but you don't really have anything to base that on when people are putting cash in markets. I don't think you're going to have the cuts that people expect, which would be bearish, but slowly we're going to start eating into this surplus. But if you're looking to trade it, I think you have almost a case for, although this would be riskier than sometimes that you make this trade is an old-fashioned option strangle trade. You're in a range here where I don't think you're popping out of this range anytime soon. I see nothing on the horizon that's going to move oil. To your point, if we didn't move yesterday, I don't think we're moving more than $1 or $2 either way for some time.
Now, let's look at the natural gas market. So I know when you're looking at natural gas, you like it higher through June, right?
Yeah, I think it got disproportionately beat down through the pandemic, and we definitely have some inventory to work off. But the build was lower than I expected this week. This is typically the shoulder season where we've built right before we get into prime heating.
Okay.
So I think we get to 250 by the end of the month on the futures. And if you trade UGAS or UNG, I think that's a healthy trade to expect it to move up. We're at rock bottom prices, record lows. As things open, we'll use more and more. Also at this price, as we've said many times, the best cure for low prices is low prices. You got a lot of gas switching. Gas is typically 40% of your energy markets. I think you get to 45% here through this month as folks continue to come off coal because the price of gas is down. Gas is very volatile. It moves quick when it moves. So we get one or two heat waves through the next couple of weeks. I think you're at 250 before you realize what hit you.
Yeah, and that's so. And so the heat wave. So what? These big electric plants use gas, right? That's what happens.
That's right.
Yeah,
that's right. Especially through the Sun Belt, like in Florida.
Right.
You use a lot of gas. A lot of your newer places where you've seen population expansion, all of those plants over the last 20, 30 years have been built with gas. The Northeast and some places you've still got coal. But they can switch, right? And so plants are more agile than people realize. They can switch from coal to gas based on pricing. And coal continues to go up, gas continues to come down and stay low. That makes their switching more profitable if you're utility.
Well, and of course, tomorrow we're going to have these job numbers. And, what's going to get intriguing, the country really shut down, end of March, beginning of April. So, these are May job numbers. What do you think we're going to get there?
I think it's going to be shocking. I see risk to the downside from what the market's expecting. And, I think, I don't know if we hit it this month, but I think, definitely 25% unemployment is where we're at. Again, the numbers lag. What people don't realize on the job numbers tomorrow, it's really only through the 15th of the month. So,
that's how that works. So that's cool to know. I didn't know that.
They start. That's when they start surveying, so the data's locked in there.
Okay.
So it goes to 15th to the 15th. It's still a month-long period. So
that's great to know, though, because that means that it's picking up April 15th to May 15th. That's what we're doing, then, right?
I don't know if we got to 25%, but I think that's where we're headed.
Yeah.
And
okay.
but man, we've seen in the weekly unemployment claims we're going green on days we're losing 2 and 3 million jobs. So. It's going to be interesting to see how the market reacts.
Didn't your professor teach you that in college, man?
Yeah, let me dust off the textbook, man. 3 million jobs down.
Oh,
market
man.
moves up 200 points.
I love it. Well, listen, man, it's always a pleasure. You have a great weekend, safe weekend. We look forward to speaking to you Tuesday.
Can't wait, man.
Thanks, man. It's our man, Mr. Jason Pfaff, folks, talking markets. Dow down 110, NASDAQ off 93, S&P's up 21. We'll come right back.